Have you ever been in a position where you have so many different stocks that you don't have the clarity to really make a good decision? In this video, I'm going to share with you exactly how that can be your advantage and exactly how you can end up making more money by selling your stocks. So I remember when I first started investing, and the number one thing, if there's only one thing that you know about investing, it's this: you have to understand when it's time to take action and when it's time to be patient. And this is as true for anything in the market as it is in life. And you guys know how I love to get into the life stuff, or the life correspondence. But really what I'm saying is there is really just one thing. You know how when you're investing and you have gains, and you might wait too long and then those gains get wiped out, or you haven't locked in your gains, or you haven't been able to capitalize on those gains, and you end up going from making money to then you're in a position where you're like, man, what happened to the capital or the profits because you didn't take action on it? And so knowing when to take action is key. And it's also knowing when to take action when an investment is down. And so if you are in a position where you have a bunch of stocks you're trying to focus on at once, you have some stocks that have made you a lot, and then some stocks that you've lost on. The tax loss harvesting at the end of the year is one thing to do. And that's something I want to get into in a second. But they tell you, just hold forever. But if you look at the institutions, like a lot of, and this is the long-term approach, the institutions, even for long-term positions, they rebalance, they do tax loss harvesting, or they sell, they take their gains or book the profit at the end of the year when the end of the year is coming about. So in this market that we're in right now, this is what I'm going to be doing, and this is the mechanism, and then you can kind of do what you'd like to do. All you do is when you're up on certain stocks that you have gains on, if you're really happy with the gains and you want to not defer those gains, but you want to have more mental clarity and not worry about whether or not those gains are going to be locked in or not, then selling at the end of the year is a great thing, because then you're not worrying about, did I make a profit this year? Is it going to go back down? If you're more on the trading side of the markets, then absolutely I encourage everybody to sell their gains when they are at that end of the month or at the end of the year. Because look, a green end of the year is great. People forget there's like percentages, there's indicators, there's support, resistance, the news, the trading, the entry, the value, all these things. But they forget, the ultimate goal is just to make money, right? The ultimate goal is to be able to have more at the end of the year than at the start of the year. And if you're able to lock in more at the end of the year than you were at the start of the year, do it. Even if it's a valuable company that you believe, or that it's just, you don't have the confidence in it. At the end of the year, it can make a lot of sense to sell. Because when you sell, you do two things. Number one, you get to reset for some of the inflows that happen in January. And then number two, you can actually realize the capital loss, deduct it from capital gains, and you'll owe less in taxes if you have that problem. And this isn't like, again, it's not admitting to defeat for you. It's just simply the mechanism to make more money by not paying as much tax, by resetting your mindset and your positions to go in fresh. And most companies, most institutions have new changes and new influxes, inflows, and outflows at the beginning of the year. And that's what you would be looking for to be capitalizing on, and finding some of those markets that seem like they're down further than they should be, and looking for opportunities where the inflows may start from institutions. And so you get to reclaim your capital. It's not in something that you're like not really sure about. You also get to have control of your capital. The other thing is turn your capital gains into real money. Especially if you're in the trader uh, game and you are up, a lot of people see profits, and you know how when you have a big profit and you just see it degrade and go back to where it was, and you're like, man, if I would have just sold. It's like, take the real money at the end of the year. Take the real money, book the profits, and this basically gets you disciplined, protects your confidence, and then it's also strategic as well, because if you take the gains in the low income years, then you can prepare for higher income the next year, and you might even be able to offset prior losses. I would encourage you to think about this construct of the government and the taxes as an advantage rather than something that's going to hurt you. I'll give you an example. When I started a business in California, they have the worst laws for businesses as far as gains and as far as profits and how much you get taxed. A lot of people know this is why big tech is moving. They even got a law that's passing potentially that's just going to be 5% off the top from billionaires. All I know is that as a person that started a business in California, if you don't pay attention to the taxes, they get you caught up in a position where you end up owing, then you got interest, and you got these things. Whereas if you just would have taken a moment to do the filings, like their $800 a year is like $800 a year plus interest plus fees if you don't get it on track, and then it turns into $2,000, $5,000 a year, and you're like, what the heck? I owe so much, right? And that's actually happened to me. I started LLCs right when I turned 18, and I didn't really know what I was doing. I was just starting the LLC to start business and get things going. And I was still learning the ropes, and that kind of happened to me, and I had to pay for it. But I'm just saying, like, the amateur style of trading and investing is just like, let it ride, let it ride. And I'm just saying, if you have the opportunity to lock in the profits, you have the opportunity to deduct some of the losses, absolutely do it on paper. Even if you don't do a full filing, just get it on paper for yourself. That way you have more gains in the future. Lastly, there's some psychology. And the psychology is, if you're getting into an investment, then you're going to ask yourself if you're going to buy it. Would it be a good buy right now? Would it be a good sell? A lot of people, they ask, would this be a good buy when they're getting ready to buy? But they should be asking, would this be a good sell? Because they can put themselves in the psychology of the people that are holding the stock. So, for example, if you're getting ready to buy a stock, rather than saying, all right, is this a good buy? What might be a good idea is to look at the psychology of the market and look who's holding it, where it's at in its current business, and look at the financials, and then say, would I sell this if I was holding it? And if the answer is no, I would definitely keep this. Then it might be a good buy. And the same thing is true if you are looking for a sell. You might take some time to say, is this a good buy when you're getting ready to sell? Because that can help you reassess whether it's a good sell or not. If you're approaching it from a seller's mindset, you might not get the full picture. You're already by default going to approach it that way. But if you take it from the buyer's perspective when you're selling, you take a moment, you say, all right, I'm getting ready to sell. Would I buy this right now? Yeah, I would buy this right now. Okay, well then I'm going to feel conflicted right after I sell. So I probably shouldn't sell because I would buy it right now. Now, if you're looking at it and you say, oh, I wouldn't buy this right now. This doesn't look so hot. I wouldn't buy this. Okay, then maybe that means you're not in it for what you should be in it for, and you should end up selling it because the psychology on both sides just isn't making sense for you. And so the psychology is one way, but here's the final thing. Selling losers is about the strength and clarity. It's not about like you're taking an L. A lot of people are like, I don't want to sell this, I'm down so much. It's like, if you have a place to deploy capital that would be a faster return or better return, then it would be ridiculous to continue to hold that asset. And you have to look at it from selling winners is also like protection, and it's not all about uh, that you didn't maximize your return by selling winners. You know, you could sell winners and look at it as clarity and protection. Look at it as discipline. And so you have the profits that are getting booked. If you just think about something like if you're holding it and you're saying, I think it's going to go up, and you're hoping, that's just hoping. It's just a strategy. Or it's not a strategy, right? You want to have a strategy rather than hoping. And so that's why at the end of the year, I sell all of my stocks and get rebalanced for the next year. Now, there's certain companies that I may not sell. I may not sell some of the ones that are just broke even. I may not sell some of the companies that I've been holding in, let's say a Roth IRA, something like that, that I have long-term growth engines invested in, like the Nvidias, the Microsofts, the Googles, Teslas, Apples, those types of stocks. But in the shorter term trades, the medium term, higher risk, or even the smaller cap stocks that aren't those huge growth engines that I've had a lot of gains on or that I've lost money on are the ones that you want to make a decision on. So while we invest long term, we also trade short term. If you want to watch my entries and my exits, join us live Monday through Friday. We're there for our daily live trading sessions, and you can tune on in every day, Monday through Friday at Market Open. It's the second link in the description down below. It's called StockMate. You not only get access, lifetime access to all of the daily live trading sessions at Market Open, but you also get a free t-shirt included. I'll send it to you anywhere in the world. And you get a community, you get all the technical fundamental analysis that can help you learn faster.